Yeah, those U.S. stocks are soaring today as cool inflation data raised investors' optimism that the Federal Reserve can stay on its rate cutting path, boosting the economy and justifying higher valuations for equities. Let's welcome in Michael Zinn, Managing Director and Senior Portfolio Manager at UBS. Michael, thank you very much for joining us.
Good to be with you.
Traditionally, I saw in your notes that next week is the best week, but can we top what we've seen over the last little stretch?
Yeah, sure. I mean, seasonally we're coming into a very strong period. Although I'd say a caveat is, this May to October period, we're up about 20%, and there's typically a sell in May, go away kind of tradition. So who knows what the calendar will bring? I think that what we've seen so far, and today is a microcosm of really what we've seen since April, which is better than expected inflation data, lower than expected interest rates, better than expected earnings. Quarter after quarter, we've really printed 10% plus earnings growth. So those have been the drivers that have kind of characterized the market this whole year, and our expectation would be for that to continue. Next week I would describe as a data doozy because we've got the Fed on Wednesday, and even though the cut is really fully baked in for October, it's fully baked in for December. You never completely know what the messaging is going to be in the presser, so that's always uncertainty. And then, of course, you really have some of the most important drivers in the public markets with their prints, their earnings prints on Wednesday and Thursday. And this whole year has really been about cloud demand, chip utilization, data center capacity, all those drivers. It's just one big land grab, and we need for the market to continue to be on the trend line it's been to support the idea that demand is far outstripping supply, for all this capacity. And as long as that's the narrative that's reinforced by particularly the cloud reports of these hyperscalers, I think we're going to continue to enjoy a good October, a good year-end, a potential Santa Claus rally, all that stuff. Not to say there isn't always headline risk and bumps in the road, and we'll probably see higher volatility as we get into this last quarter, but our expectation is for all those narratives to continue to be pretty positive.
All right, let's talk about the earnings next week. What are some of the numbers you'll be looking for, both positive and negative?
Yeah, well, I mean, I think, our main focus is going to be on the hyperscalers, and it is going to be on the cloud element of the hyperscalers. They're without getting too much into the individual names, but I would say that I think there were some very, very significant announcements on cloud utilization earlier this week between some of the big private large language model operators and the public cloud capacity users. So that, I think, if we can, that sets up a narrative for next week about what the rate of growth is in cloud for the hyperscalers, what their margins are, and what areas of the market are they really catering to. These announcements really have been the driver. So that's what we're going to be looking at most: what cloud revenue looks like, what margins look like, and who the partners are with each of these companies.
And I know everybody's loving it right now, but you have some concerns as well about the 50-day moving average, though.
Yes, very much so. And I think, what's happening with the caveats about the market in general, of course, evaluation, we're kind of priced for perfection, but also the narrowness of the leadership. So we're making new highs in the market today, crossing through 6,800, but we're making kind of local lows as far as the number of stocks in the S&P 500 that are above their 50-day moving average. So we now have less than 50% of the market above their 50-day moving average, or somewhere around there. That's often not a great setup, but I think what it reinforces is the fact that so much of the returns are accruing to the mega cap hyperscaler players. They're the ones who are really garnering much of the returns of the market, because that's where people want to be. That's where all the capex is going and being derived from. The other elements of the market that are participating lately have been small cap, and that's certainly been aided by more benign inflation and better interest rate levels as they go lower. What we haven't seen with small cap yet have been upward earning revisions that are kind of following along that. So that gives us a little bit more pause about the durability of the small cap rally.
Okay, Michael, thank you very much for joining us.
You're very welcome. Thanks so much.
Michael Zinn is Managing Director and Senior Portfolio Manager at UBS.